All right, guys, so we know AI is just basically all the hype, all the rage. I mean, everybody can't quit talking about it. Stocks are going to the moon everywhere. So I felt like we need to discuss it today here on this channel, kind of decipher, the truth from the hype per se with all of it, and honestly look at Wall Street's take. What are they thinking? What stocks are they looking at? And I'll kind of give you my take on all that as well. Because let's be honest here, guys, sometimes Wall Street gets it right, but a lot of times they get it really, really wrong. So we need to be able to look between the two, separate everything out, and figure out what we can use to invest further. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. All right, so this is going to be a little bit different than one of my normal videos I do where we discuss, individual stocks in a particular sector or the stocks I'm buying or anything else like that, because I actually found a video where basically you had a Wall Street guy discussing these stocks, discussing some points about AI, and it was just honestly, part of it was good. Now, part of it I completely disagree with. Part of it was really, really good. So I figured we would go through it together here, talk through the stocks, talk through the points that he makes, and kind of give you a good overview of AI and kind of my thoughts on AI stocks moving forward. And I know I'm already screwing up the word AI. I'll try my best here to get to get the grammar under control here. Sometimes it's a struggle, guys. It's just one of those days maybe. Anyways, let's jump into this so we can get to all the stocks.
AI boom is sparking a massive rally in tech. Nvidia has been one of the clear winners this year. Shares surging more than 160% since the start of the year, up 25% in just the last 5 days. Well, earlier this week, Nvidia reached a major milestone, briefly joining the $1 trillion valuation club. We'll hear with more on how to play the AI hype. We want to bring in Adam Johnson, portfolio manager of the Bullseye American Ingenuity Fund. Adam, it's great to see you here. So before we get into those specific plays, as a portfolio manager, how are you looking at this hype in AI? Is it warranted?
Did you say the hype in AI? Because I think it's actually the reality of AI. And if you listen to what management said earlier this week, it's actually a 10-year cycle. And I'm even going to go so far as to call it a super cycle. Let me put it to you this way, Shauna. Every computer that's out there, including this guy right here, the iPhone, it's basically too slow. It's not powerful enough, because I think what's going to happen is that artificial intelligence is going to become so synonymous with the way we operate, the way we think about the world around us, that what we're going to find is that we need more powerful chips. We're going to need new computers. That creates a replacement cycle that isn't just about the hype today and where's the stock going over the next week or two, but it's actually about sustained demand. It's why the company guided up and said, we're going to have $11 billion of revenue this quarter. And to put that in perspective, back in 2020, they had $11 billion in revenues for the whole year. So in just 2 years, they've effectively quadrupled the amount of money that's coming in the door. And I think that's just the beginning. So no, I don't think it's hype. I think it's actually the beginning of a super.
I mean, I guess it's possible we are in kind of a super cycle, whatever the heck you want to call it. But a few points there on that. First, I'm not surprised at all. And I think this has been going on for a while there. The idea that, we need more powerful chips, that essentially everything we're doing is, getting more and more AI based on the moment. I know it seems like it just came out of nowhere, but it's like Google's been using AI for years. So has Meta, so has Apple, so has a lot of other folks out there. Obviously Tesla has. It's not new. It's not unusual. It's just basically now in the cycle and now kind of caught up in the noise and everything else. And you're starting to see maybe big leaps in regards to, ChatGPT being a big leap forward. I still think it's years behind in regards to a lot of other things. But, this is how cycles kind of work. And I agree with this in a sense that cycles work in this way to where I don't think all of a sudden next year everybody's using AI and AI is all the rage and, machines are taking over and Skynet and the whole nine or anything like that. However, it starts now and people build towards a decade from now, that being not Skynet, not that craziness being the case, but over the course of that 10 years, AI getting more and more and more integrated into our lives. That's kind of the way I view this cycle, even though in terms of the stocks, it seems like, oh, hey, the hype is this month, so it goes to the moon, and then next month it's going to be something else, and that goes to the moon. Yeah, that happens in certain sectors, certain reasons, kind of like the EV boom, right? We saw that. I was saying, hey guys, this is a decade away from really being there. Everybody else was saying by 2025, everybody's going to be driving EVs. Nobody's going to be in, ICE vehicles anymore. And that just simply hasn't played out at all. We're not making those strides yet. Maybe by 2030, maybe 2032, 2035, something like that. Still don't think you're saying 100%, but we'll see that large influx that we think. But you got to start somewhere, and it will slowly creep into our lives over the next decade. And I think that's exactly what AI is going to do here. So obviously this was a huge boom for NVIDIA. How long can they continue to sell these crazy, ridiculous, expensive chips and them being basically the only ones that can do that? How many years does that happen before somebody finally catches up or has an alternative or something else? I don't know. But the point is the investment and everybody needing to invest in this more is absolutely starting to happen. Now, do I think everybody's going to run out there tomorrow and try to buy these super chips at super high prices? Some of the big dogs probably are. A lot of other companies are not. They're going to find other ways to do it and to compete. And that's kind of where I get into. Wouldn't necessarily call it a super cycle, but it's definitely a cycle that we are working into, but it's going to take a decade to play out.
Cycle.
So Adam, Diane here. Who else are the winners here? Obviously, NVIDIA has this clear lead. They joined the $1 trillion club this week. Who else are the clear winners in this AI?
Oh yeah, I guess I should give the take on NVIDIA there. We discussed it in another video. I'll link it up here at the top. But NVIDIA reset their valuation with this latest guidance. You don't put guidance out there. I saw some narratives online that it was BS or fake or something like that. And I'm like, okay, that's how, there's very few ways as an executive you can get put in jail. And that's definitely one of the ways to do it, is to absolutely lie about guidance on your earnings. Now, it doesn't mean you can't miss, but to flat out lie and some of the conspiracy theories that were floating around and stuff, just silly talk. So ignore all that sort of stuff. However, I would say that even though they reset their valuation, a lot of that reset has already been priced in. So how much more can it run? Who knows? Wall Street gets crazy. Wall Street, as we saw, got crazy to the downside when you could buy it for 120. Now all of a sudden to the upside, are we, past what the reset valuation was? I don't know. Again, I haven't, I said in that video, I haven't studied the stock. I don't know it intimately. A lot of you guys can tell me that, a lot better than I could. And there's obviously probably going to be other channels out there that have a better grasp on that valuation. But I absolutely, with that sort of a run in a stock after that announcement, it makes sense to me that, hey, a lot of that valuation, maybe all of it, has already been priced into the stock there. Doesn't mean it can't go higher. Doesn't mean it can't trade at a premium. It can trade at a premium for 6 months, a year, 2 years. Absolutely it can. It may also come back down to a more reasonable valuation, but that just means opportunity if that's what happens.
Yeah, well, Diane, they're not many. And that's in part why these names are running as hard as they are. I call it scarcity value. Obviously, you've got NVIDIA. And the reason NVIDIA is the play is that their chips are so fast, so much more powerful than the competition. The NVIDIA chip is capable of 30 trillion calculations per second. That's like 1 millions 30 times. It's kind of hard to fathom, right? No other chip maker can come even close. That's why NVIDIA is the proxy for artificial intelligence. But to your question, some of the software providers, there's C3.ai, which was founded by Tom Siebel. You may remember Siebel Systems back in the 90s. That's a company that actually helps companies design artificial intelligence gathering and predictive systems that will look at an entire network. You're Delta Airlines and you want to try to figure out how to optimize passengers, flights, crew, everything else. You put it into an AI-based program and it starts to look at the world differently and a lot more capably than we can at 30 trillion calculations per second. So C3.ai is one. Another.
Now, in regards to C3 AI, to me, the biggest question is, when are they going to turn that profitability corner there? They're still burning cash like crazy. They're growing revenues, not crazy growth or anything like that, but really good growth. They're beating, obviously, on earnings. But the question for me still becomes, when are they going to be able to turn a profit? What is kind of that profitability outlook for them? Now, admittedly, I've not listened to their earnings call yet from the latest earnings, so I couldn't tell you. Maybe they put it in there. Comment down below if that's the case, so that way I know. I'll go look at that later. But I don't own the stock, so that's why I didn't listen to the earnings call in the first place. But that to me is the question you've got to answer with that stock specifically, is not what value can it bring. Everything they just described right there, I absolutely see how every company can use that. But the question becomes, can they make that profitable? Can they turn that profitability corner and really churn out, large profits, year over year, quarter over quarter, as we kind of move forward and as things get more commoditized and as, there's not a lot of competition right now, but as competition comes in, what do they do that differentiates themselves from other competitors? Or, what is the moat that they have to where other new competitors can't come in? Because obviously, as the space heats up, you're going to see more and more competitors come in. And to me, just on a cursory glance, kind of as I pulled up the company, as I pulled up the earnings, in regards to reading through the presentation and everything, I didn't see something like I see with other companies to where it can't be easily duplicated and easily implemented in the company there. Now, again, I haven't deep dove it, so I don't know that to be true. That's just a cursory glance that I gave at it. I kind of went, that was kind of one of the questions that I would need to answer, and something I would need to look at a lot harder is that path to profitability. And is there an actual moat there that's a lot deeper than what I could see? So that's definitely questions, if you're thinking about investing, I would look at right there.
It's been getting a lot of attention, although it's kind of funny because it's been so hated, is Palantir. By the way, the ticker on the first one is AI. Palantir is PLTR. Palantir was founded by Peter Thiel, maybe the most hated man in Silicon Valley, public enemy number one. He's very conservative, so he doesn't jibe with the whole ethos out in Silicon Valley. the government is Palantir's biggest customer at about 55% of revenues. And the other thing that Palantir does, which isn't great from my perspective as an analyst and a stock picker, is that while they're very good at pitching themselves to companies and winning the business, they go in with their team of AI scientists. They work for 9 months and then they leave. So they work so hard to get the customer, they make money for 9 months and then they leave, and they don't really get that much in terms of subscriptions on the back end. So
Wow, I don't know if he's looking at the same data I am in regards to Palantir. That tends to be one of the stickier products out there in that business line. So I don't know what he's looking at there. I wish he would elaborate on that a little bit more. I don't think he does. But I don't know. I agree. Peter Thiel's hated. And in the end, Wall Street cares about money, so they don't care about politics nearly as much as about money. So Palantir continue to do what they do. I don't mind the government piece of the pie at all. I understand that some folks don't like that. That's okay. They are growing commercial. That will be where the future large growth comes. But in the meantime, having those, contracts in terms of the government absolutely, kind of provides that anchor for the company. But in regards to them not being able to get renewals and subscriptions moving forward once their team moves out and the company is obviously, now using Palantir software, that just, I don't know, that doesn't jive with the data that's in the earnings call there. So I don't know.
those are the reasons why Palantir hasn't hasn't gotten the vote from Wall Street that some of these other companies have. That said, Palantir was at $7 for months and months. It's now up to 14 or 15 in like a week. So there's a gold rush for these handful of names. There are not many of them.
Adam, what about the larger tech names? Obviously, Microsoft and Google, really the focal point when it comes to Bard, really, but Microsoft when it comes to Chat GPT. How much investment, interest do you have in those two names, given the fact that they are obviously far from those more pure plays that you were just talking about?
Well, I'm long them all because they're wonderful companies. But to your question, Shauna, no, they're not pure plays. They're not anywhere close. I mean, yes, Google is developing some in-house artificial intelligence. I mean, of course, they'd be crazy not to. Just as Microsoft has backed OpenAI, the company that created ChatGPT. But remember, I mean, even ChatGPT, which everybody's talking about, isn't making any kind of money to speak of at all. I mean, they gave the thing away for free last November, and now they're talking about business models where, you can pay $20 a month or something. That doesn't accomplish a whole lot. We're talking about a company with tens of billions in revenue. The notion that Microsoft is an AI company is I think it's wishful. But no, I'm long Google.
Yep, I'm right there. That was what we were saying when the Chat GPT thing, kind of came up. You guys remember everybody was selling Google because Chat GPT was going to kill it and all this other stuff like that. And I went, hey, until there's an actual business case for it, I don't care about ChatGPT all that much. And two, how do you monetize it? And as you can see, they haven't figured out a great way to monetize it. And even if they are able to pull in some revenue, it is going to pull in some revenue, but it's going to be very small in relation to the size that is Microsoft, and doesn't really provide that launch pad in terms of Microsoft killing off Google or anything else like that. We just haven't seen any of those things and all the hype that came around with ChatGPT at the beginning actually play out. So I agree there. There's not a lot of, there is none actual AI plays in there that I would consider more like a Palantir and the other ones that he mentioned. The pool is just very, very small that you can draw from, but they all have AI elements within their business because it just makes sense. But again, this isn't new. It's been going on for years and it's not new. It's just getting the news and it's getting accelerated and it's starting to move itself forward.
For search, I'm long Microsoft because it has effectively become the backbone of the cloud, computing in the cloud. And yes, each of them has an AI practice. Each of them has an evolving AI approach. Frankly, so does Amazon, as you might expect, which is how they figure out how to sell this stuff. But if you want pure AI, I'm telling you, it's really hard to do. You got Ticker AI, which is CA3. You've got Palantir, run by the most hated man in Silicon Valley. And you got NVIDIA, which makes chips, which powers AI, but it isn't AI per se. Again, it's a really small universe, and that's why all these companies are up so much. Everyone's jamming into these names and pushing them up.
All right, and I wonder if some of that's a little bit of that is FOMO. And so you mentioned C3 AI, OpenAI, C3 AI in particular. That stock taking a hit today amid some questions about its accounting, but it has AI in its name. What do you think that we can expect to see with regard to companies trying to get in the space or pivot, even how they brand themselves? We saw that before with Facebook becoming with Meta. Do you expect to see some of that in this space, and is that even a good idea?
Yeah, we've kind of seen this movie before, and it's funny how it seems to repeat about every 10 years. I mean, you mentioned Facebook that decided it was going to pivot to Meta and the metaverse. That didn't work out quite as planned, though I am long it. I bought it in the hole, and so far so good. Square, I've actually been buying, and that rebranded as Block in order to capitalize on the blockchain. But admittedly, that stock is down 60, 70%. If you remember back in the 2000s, everyone wanted to be a .com, and if you had, pets.com, that was the poster child. So that's why I say, we've sort of seen this movie before.
He's absolutely right in regards to companies are going to try to jump onto this and ride the wave. It's not unusual. That's why to me, I don't care about the hype that they put out there. I don't care about them changing their name. I didn't care that Meta changed Facebook changed their name to Meta. I still call it Facebook sometimes. Sometimes I call it Meta. It was irrelevant to me. He was all in on the metaverse at a time. I cared about the business underneath. So when everybody was screaming about metaverse and how it's trash, and obviously, they got like Wii looking characters out there, in that, I was looking at the business and going, but wait, the business is still great. The core business, where the money is actually generated, is still great. I don't care whether he calls it Facebook or Meta, whatever, call it whatever you want. Call it Mark for Mark Zuckerberg. Who freaking cares? I care about the business underneath, and the business underneath was performing incredibly, despite him spending incredibly stupidly on the metaverse and not paying attention to his business and everything else. So it just got beaten down to a point where that was just an easy play, regardless of all the hype behind it. So I don't care that a company's called AI whatever, or they want to put AI out there. I'm looking at the companies themselves. So kind of like what he said with Google. Google, hey, I'm in Google for search. I would agree with that completely. If I'm going to be into Microsoft, it's going to be for the cloud services, for all the programs and all the other things that Microsoft does that I don't see governments or businesses or anybody else getting away from Office Suite anytime soon, or any of the other things that Microsoft can do. That's just kind of their business, their niche. Apple, same way. It's not, I don't care whether or not AI is a part of them. I'm going to buy, the next iPhone whenever it comes. And well, not the next one, but whenever I need a new phone, I'm going to buy a new iPhone. When I need a new laptop, I'm going to buy a new MacBook. It's just kind of how that's kind of where their core business is. And they've been implementing AI into those core businesses to make them better, more efficient, to make their products better. So that to me is a win-win, but they're not pure AI plays. It's sooner or later, just kind of like he was saying with .com, everybody's going to have a website. Everybody's going to have AI somewhere in their business. So who freaking cares? At some point in time, this will become normal. Nobody cares. No, you can't go to a company now or an investor and say, hey, you know what? I'm on the internet. Invest in my company. My company is awesome because we're on the internet. Like, who freaking cares? So is my grandma. I don't even have a grandma, but my grandma's on the internet anyways. So it's just silliness at this stage. And we may be at the part of that silliness. And that's why it's very, very careful that you look at the business itself, not the hype surrounding it in regards to what's happening. Use real numbers, real data that are put out in earnings calls, and that's it. None of the hype narratives around it. If they're willing to make projections in terms of guidance, I can see that. When somebody's out there saying, well, 2030, that's hype garbage and nobody can project out to 2030. So that to me is just useless in regards to analyzing, is this company not, a great company to buy now or not? And then of course, like we always talk about, do your valuation on the stocks. That will be your guiding light as to whether or not it's super hype cycle or whether it's actually something that's there and there's actually more opportunity there.
Or something comes along and everyone says, oh, yeah, we should do that. I mean, look at the SPAC boom, right? 2 to 3 years ago, everyone said, oh, wow, if we really want to hit it big, we should create a SPAC. So there is that.
Well, that's actually not true. Everyone's creating SPACs because it got around the rules of the IPO and meant more money for the founders and the people that were taking the company public with a lot less paperwork, a lot less everything at the time, a lot less disclosure, a lot less everything involved. So let's see here. I can disclose less, make more money, and pay less in fees. Yeah, let's go with a SPAC instead of going IPO. And of course, money being at zero at the time, that was also a huge driving factor as well.
Element to artificial intelligence, except that you actually have to come up with goods. You can't just create a website and say, we're going to sell XYZ and we're going to call ourselves XYZ.com. You actually have to have the computing power. You have to have the software. And I think that sets a much higher bar for this artificial intelligence build out. And the other thing, this is going to take many years. So there are going to be some winners and losers. You're not going to be able to see very many companies IPO yet because that window hasn't opened. It's been very tough on Wall Street. You report on layoffs. I mean, Goldman is laying off more as of today, right? So the IPO window hasn't opened. When it does, maybe next September, you're, I think, going to see 3-4 names that will get a lot of attention, and they're all going to build themselves as the way to play AI. So stay tuned on that. In the meantime, just go buy NVIDIA.
NVIDIA. That's what everyone seems to be doing, at least over the last several months. Adam Johnson, great to have you. Thanks.
All right. A little bit of fun there with these guys, but kind of the last point there in regards to, you know, it's much the barrier to entry. I mean, back when the internet, because nobody understood the internet, the barrier to entry was actually low, right? I mean, you can get out there and start a website today. I understand it's harder now than it was back then, but it was still relatively low for any company to get out there and figure it out. For somebody to actually have something AI related, heavily AI related, there's a lot higher barrier to entry than there was before. And I agree in terms of money, in terms of this being the right time to take companies public. Everybody's M&A activities are way down on Wall Street. So it's just not the right time to take companies public anyways. And I'll be honest, it probably takes time to ramp up a company that is going to be able to really take advantage of this. So I wouldn't be surprised if it's 2 or 3 years away till we really start seeing that boom in companies. However, there's going to be some trash that gets through and gets to us. It just always happens. Some people just can't wait. These Wall Street guys need bonuses. They want big bonuses. And you know, they're not willing to wait 2 years for it. They want it, you know, now. So don't be surprised if we see some trash come to market here in the next couple of years. And remember, if you want to see all my buy and sell alerts in real time, you want to take 5 courses for free, see my watch list complete with price targets, slide into my DMs or hang out with my group in general, and a ton more. Make sure you check out the link down in the description for the Market Insiders private group where you get all that. And we got a stock analyzer tool coming that's going to be free for members. So make sure you check out the pinned comment and see if it's right for you. And click here to see the stocks I'm buying now. And click here to see my exact plan for the market right now. So thanks for watching, and we'll see you in the next one.